Stock market analysis and projections on the S&P 500. Make sure you read this first because that tells you about our approach to analysis and about your use of our analysis. Very important to read this slide. This is the askSlim Premium Services preview. All of the stuff that is here is just an amazing list of, and shows you the depth of the type of analysis that we bring. This is our preview that's free to you. You don't need a credit card, and this is scheduled to end on July 12th. That's just in a few days from now. You'll have time to still preview if you sign up now, as we extend some time out to you to be able to review all of this. Go to the top of the askSlim website, click the Learn More button. There's a lot of detail about this, and then sign up for free. You don't need a credit card, and you're going to get a great idea of all of the fantastic work that our analytical team does and everything that is offered to you in this special, no cost at all, no credit card required. Sign up for that right now. This is the look at the day trader cockpit, and this is just one thing that I want to show you, because if you're an intraday trader, this is phenomenal. It tells you the conditions of the market and shows you my favorite 8-minute strategy and the price zone roadmap, which shows you support, resistance, acceleration zones. It's amazing. And this is broadcast all day long with the S&P 500, NASDAQ, and the Russell, and you're just going to love that. Stock market analysis, S&P 500, multiple time frame analysis. I'm just going to bring up that chart I just did on Bitcoin and switch this over to SPX. You can see it loads up on all of those charts, and I'm going to bring this forth. So we've been in this period of super strength in the market, moving up to heights that I certainly did not expect. Only people with the most extreme bullish forecasts had the market getting up anywhere near this level, and many now with forecasts up to 6,000 or higher on the S&P 500. Based on the analysis I see right in here, the market has gotten up to that monthly extension right over there, which is very key. Now, this was the absolute highest level that we saw in our revised upside forecast that we thought the market could get to, just over the 5,500 level. But now we have to be looking at higher levels because the market certainly is not stopping. Now, when you see the minor cycles right in here, the next time that they line up together isn't until this yellow oval out until pre-election time. That's September, October, November, where the really big risk is for this stock market, where you could project for prices much lower. However, right now we have this super strength, and you can see here our reversal scout is very positive, and a reflection of this money flow that has been coming in into these high-tech stocks and this very narrow rally that we have seen, which just keeps going. So what I put in here now are the potential for higher projections, because that's necessary. When the market is this strong, I can't deny that fact and have to show you the next potential levels. These lines right over here are from the daily chart. I'll show you that also. That's at roughly 56.15 and 56.56. Those are important levels. You can also see this level right over here at 56.71. So 56.56, 56.71, that's the 61.8% fib extension of this big cycle that you see right in here. So those are key levels. Now, what's really interesting is that the market cap to GDP, somewhere just in the middle of this right over here, will be at 200, a level never ever seen before. The valuations by all measurements are as extreme as they have ever been. And this is the most amazing rally that maybe I've ever seen in my 50 years, because it has continued during this period of very high valuations. And I traded the rally up till 1987, before the 87 crash. Of course, I traded in 1999, beginning of 2000, before the dot-com bust. and of course in the rally that came just before the great financial crisis. So I've traded all of those, and none of those got to this extreme, which is just, in my opinion, wild. But it makes sense when money is flowing into a very, very concentrated number of stocks that weigh so heavily in the indexes that are expected to get huge increases in earnings. So that doesn't justify these levels. It just does say that's the reason. And also, it does highlight the fact that any little bit of disappointment and volatility is going to be huge, because money will come out of those very quickly. So while the market is very strong and at these very high levels and momentum is strong, we have to allow for the fact that it could get even higher. At the same time, I really have to allow for the fact that you're going to see some extreme movements in here coming up. And of course, there's the election and everything that goes with it. And that is really just starting. So we have a corrective period out over here on the weekly chart. Now, some of these corrective periods don't give you much in very strong markets. When you look at this one right over here, the correction was from 47.95 down to 46.79. So 47.95 to 46.79, that's like 100 and something points. That was like 2.5% decline right over here. That isn't very much. But when you go back to some of these other midpoints, you can see in here it was very strong, and that gave you only a little bit more of a decline in there, as that was also swamped. When you look at this one over here, it gave you a much bigger decline. That was in the area of 10+%. So you don't really know, but when, in my opinion, is when you're at this period of extreme valuation, the volatility is likely to be greater. So we're looking for some bigger moves. Now, the best case I can make is 54.25 on the downside. Well, that's not very much. What is that? 3.5%. And then this support right over here, 53.35, which gets you down maybe about 6%, 5.5%, 6%. So none of this is very big declines that are expected. Those bigger declines are expected out over here and into that fall quarter, the fourth quarter of the year. So for now, we're just going to look for some sort of a chop to develop and some failure. But in the meantime, the market will have to show that to us. Remember, this is still giving you the strength in here, even though we're getting up to a period of extreme high volatility potential. This is the daily chart in here, and you can see that the rhythms in here on the cycles are beautiful. As you've got this correction right over here. Now, I want you to note that this was swamped, made a triangle right over there. This was swamped, made like another triangle right there. This was swamped, made a rectangle right over there. These were all super strong, as you could see right there. And now when you get to these last cycles right over here, this one, well, it gave some ground, but it wasn't all that significant. As you can see, it actually made a diamond top in there and a little bit to the downside. But once it was over with, there wasn't much time left to fall. This was just this little rectangle that you can see right in here, that the upside pressure, as you can see from the slim ribbon, and of course from the reversal scout on the daily, as you can see there, and from the weekly chart, just would not allow a correction at all. Once the time period was over with, then you get into the next rising phase, and you've got this very nice rally here over these next several days. Now, here are your upside projections right in here as we build this cloud. In other words, the higher a channel right in there. And Hurst, my work comes from JM Hurst, and he always enveloped these cycles. I put in the top of the envelopes is what you see right over here. But then on this next projection, I put in the full envelope. I'm projecting what is the upper or lower potential envelope in here. And you'll notice right over here, 55.41.12. That's this low right over here. If this market turns down and breaks that, it will tell us that we are in an intermediate correction, as what we see right over here, and that's what, of course, we projected on the weekly, that period where we thought volatility would go up, and that takes you to sometime around the first to second week of August. Right over here you could see first to second week of August, so there's an alignment with the weekly cycle. And then if this were to break, then what we would do, we would put in a lower channel right in there, and let me just duplicate this and you can see, and this would only show up, promise I can grab that, this would only show up like this were we to break this support level right over there. In the meantime, that's not the case, so we only show the lower channel or envelope coming down to that level right there, the midpoint coming down to what would be midpoint support, which we don't have in there yet because this is only 3 days old. So we'll see what happens in the next few days. We'll be putting in some supports, but in the meantime, we're projecting higher. This is that monthly extension that we have right in there, and if it were to stop today and then move right down starting Monday, that would make sense to me. If it gets through the monthly extension, then these are those levels around 56.14, 56, something right around there, and then the 78.6% at 57.13. Again, when you get to those levels, you're up at levels of 200% of GDP, and I can guarantee you that if that happens, the reversals are going to be dramatic, though they can be dramatic at the level we are at right now. You can see on here on the bottom, this is the option bias study. It turned negative over here for a brief period of time while the market was correcting. It has been positive, telling you to keep your option positions in the index biased to the long side during this whole period. And guess what? That would have been fantastic. So let's move over to the momentum condition chart right over here, and you can see this is where the momentum condition turned positive at 51.80 right over there on May 6th. Now, if you get our market condition monitor, MCM, which are for level 3 and 4, it gives you all of this information. And when the conditions change, overall, you can actually get notified. We have a great new notification system that you can put this app on your computer, and it will notify you when these things change. It's fantastic for level 4. And you can see in here it's been positive. That little minor correction we saw right over here and right over here as it stayed basically above the slim ribbon, which gives it support, and it continues to move to the upside. So momentum's still strong. You can see the slim ribbon PO as it gives these upside momentum reversal conditions. So it says upside momentum to resume, upside momentum to resume, again and again. So again, this is a level 4 indicator. So write to Matt at askSlim.com if you want to know how to get that. The slim ribbon PO. That shows you the momentum conditions very strong. This is your 2-hour, and on the bottom here is the market condition indicator, and that gives you an indication of when it's strong. When it's above the 25 area, it's positive. When it gets under there, it turns into a test period between 25 and minus 25, and if it gets under there, it then turns negative. We haven't seen anything like that for a long period of time. It's sitting at about 89, a very positive condition here in the askSlim MCI market condition indicator. So positive, this is the slim ribbon positive, and a lot of strength that you see right in there. That is, again, the weekly, and let's just go over this quickly. Weekly positive, momentum positive, into the resistance area, high volatility expected during this period. This is daily, moving into the upper channel, positive, with some upgraded levels in there for resistance, that key level 55.41.12. Until you get under that, we have no reason to be anything but positive. And positive momentum conditions here as we look at the daily momentum with upside resumption signals, and the 2-hour here as still positive. That is a look at the stock market. Wanted to give you that comprehensive review as I've been away for a couple weeks. Please pardon my coughing. I've stopped a few times while doing this recording just to be able to clear my throat again. And hopefully next week I'll be a lot healthier. We're going to have the whole team for Market Week Live And I think you're going to like that again as we do that on July 12th. That is just a great opportunity to learn from all of us.